Hey everybody, welcome back to the Market Interest, where we talk stocks, finance, and the markets. What I want to do today is go over 3 stocks that I perceive to be undervalued at this time. Now, we know there are a ton of political tensions right now between Russia and Ukraine. There's a full-on war, and so there is a lot of tensions, a lot of political risk in the environment right now. So I think it's a much smarter idea for people to shift into more value-oriented stocks, to get more of some cash-producing companies, potentially collect a dividend off of these companies, and start to have more price appreciation for those undervalued stocks. So I want to go over 3 different companies, and 2 of which are in the energy sector. Now, as you know, Russia is a major producer of energy. As you can see here from this map, this shows just the gas pipelines, natural gas pipelines from Russia into the rest of Europe. So they really have a massive expansion over here. I think that there potentially could be some opportunities if so many countries right now are protesting against Russia and their actions, then there's some opportunities for companies and other countries to start producing those energies as well, which is why I believe 2 of the companies I'm going to do a review over are energy related, and I think have some opportunity there. Now, keep in mind, the transition from collecting energy from Russia, that can't change overnight, right? You know, we can't put up windmills overnight. We can't get gas or energy from other countries overnight. So it's going to take time. But I think if we're thinking about more of a longer term game plan and have some strategy built behind this, then I think there is some potential for other companies and countries to benefit from this process. So let's start off with our first company here. The ticker is PBR, and I can't pronounce this, but that's the name of the company right there. Over the past year, they had a 71.5% return. So fantastic return. Year to date, even better, especially compared to the rest of the market. So they're up nearly 30% year to date. Their territory extends quite a bit. They're a worldwide organization, and they have a presence in Brazil, Argentina, Bolivia, Colombia, Chile, Paraguay, Uruguay, USA, and the Netherlands. Figures they don't rhyme. And actually, I think they also, and the United Kingdom. So they're in the UK as well. So massive territory that they cover here, guys. And their activities, they've got multiple areas that they specialize in. So it's going to be oil and gas exploration, refining, supply of natural gases. Looks like they're getting into the electric energy. So that's pretty cool too. Transportation and trade. So they're actually moving products as well. So they really cover a lot of the energy sector. If we take a peek at their market cap, guys, again, as I was saying, big organization, market cap is nearly $90 billion. So it's a big boy here. This is the real deal for this company. Earnings per share, you're looking at $2.65 only, and that's on a $14 stock. So that's pretty solid. That's a solid earnings. The price to earnings multiple is 5, close to like 5.5, and they have a yield on their dividends about 6.38, which is solid as well. So they're paying a dividend. They're consistent with that, at least so far at this point in time. A good forward multiple, lower multiple right now, especially compared to the average. And if we actually take a peek at their peers, just to look at the forward multiples of other companies as well. Yeah, and their PE, non-GAAP PE, again 5.36, so a low multiple, and it's lower compared to their peers as well. So lower multiples, that's usually a good thing. It's something that you want to see in, or the typical characteristics that you will see within a value-oriented stock. That's really why they're considered valuable. Their revenue growth, they've had solid revenue growth as well, guys, 64.5%. And look at this compared to their other peers. I mean, it looks like the industry overall has done really well, except for BP. Now, I want to look up at their profitability. And they're getting solid grades pretty much across the board. We look at gross profit margin, 55% compared to their sector median at 38.5%. And let's look at their net income margin, 27% compared to the 5% sector median. So really, really good margins right there, guys. That's really good margins. Let's jump back over to their website. They do have on their website an area where you can take a look at their strategic plan. And I like it. They break down a lot of their key focuses with the next few years. And I think it's really important always to be controlling debt. It seems like having a value creation, like they really are focused on their investors, their shareholders, and saying, how can we create a company that is continuously creating value for our shareholders, and whether it's people that are actually owning their stocks through and paying out a dividend, or if it's going to be other people who they're doing business with, or the environment, the communities that they're working within. So they have a lot of different areas that they're focused within, and it seems like more ESG, environmentally, social, and governance-oriented focuses are important to them at this. They want to have cleaner energy in terms of how they're collecting the energy and producing it. So it's pretty interesting if you're into that type of stuff. I more care about the fundamentals of the company, but that is an area that they're really pushing for as well. So that's stock number one on the value-oriented stocks. And again, for a share price of under $15 at this point in time, I think that's a solid buy. I think it's an opportunity where a lot of people can actually take advantage of a lower share price and start investing into a company like this. Just a reminder, these are cyclical stocks, especially the energy sector. It's going to be cyclical at times. So it's something to be aware of. Just keep your finger on the pulse there. But nonetheless, it's a solid company, major producer, and worldwide. They're all over the world producing and having operations. So a professional organization nonetheless. Let's move on to the second company, and the ticker is CPG. It's Crescent Point Energy Corp. As you can see right off the bat, they had a phenomenal year. They're up about 81% for within the past year. And then year to date, they're up nearly 30%, 29.5%. Take a peek at some of their multiples here. Their earnings, they have earnings per share, $3.31. So that's nearly 50% of their share price. The price to earnings multiple is only at 2. So that's very solid. It's a lower multiple. We like to see that, guys. Dividend rate is only about 3 cents. So they're at about like 0.5% yield. We've seen better, but I wouldn't run to this stock for the dividend, right? We're not running to this stock for the dividend. We're looking at, we're hoping for this thing to pop. So the company as a whole, it's got a market cap of $4 billion. So, so decent size there. Again, I want to check out their peer valuations. And you see price to earnings valuations. We're looking at nearly 3.5 when the other companies are closer or in the double digit area. All right, let's take a peek at its valuation. Let's look at profitability instead. All right, gross profit margin, 69% compared to sector median at 39%. Net income margin is solid. Boom, there it is, guys. Over 90% compared to 5% in the sector median. So 90%, that is incredible. Cash from operations, close to $1 billion. Looks like their asset turnover could be better. They're reinvesting in the company. They got capital expenditures. So let's take a peek at this. I want to see how their net income margin has been over time. Yeah, so it's like it's way better than what it was before. So it looks like in 2020 they really got hit. Energy's going up for a ride here. So this is a 5-year. So things have been a lot more volatile. So as we know, the energy sector really got hit in 2020. People weren't traveling. They weren't, they weren't buying gas. They didn't need to. Everybody was staying at home. So obviously their margins really got beat up at that point in time. And then things start to, come back into favor within that 2020 period, more like 2021. Energy was coming into favor, and that's where you start to see, more of their margins increasing quite a bit within that period. Now, Crescent Point, they're a smaller organization compared to the last stock I was just showing. Now, their operations are actually in a much smaller area as well. They're a Canadian-based company, but they do have another location in North America as well, in the U.S., North Dakota. So so mostly Canadian based, but a little bit in the U.S. When it comes to Wall Street analysts, they're pretty much a buy or strong buy by most analysts. We have 5 of them saying strong buy, 6 of them saying buy, 2 of them saying hold. And I'm curious as to why. I'd have to read up on that, somehow get access to those, their reports there. And then based on Seeking Alpha's recommendations, they're ranked number 1 in the industry out of 73. So that's a lot out of the energy. I mean, that's pretty good. They're ranked number 3 in the sector, and then ranked overall 4 out of over 4,000 stocks. So, and that's Seeking Alpha's algorithm, their tool that they use. What I do want to see is how much cash they usually keep on hand. I think that's important to know, especially again, things are just really volatile right now, and I want to know how much cash they have on hand for 2 reasons. 1, if there's, an emergency, but 2, if there's a really good opportunity, if they are able to capitalize on a lot of the tensions that are happening with Russia, Ukraine, and maybe, produce some more oil somewhere else within their country, then and provide it to Europe, then we want to know that. So let's look at their balance sheet and see what they've got, at least in liquid assets. All right, so they got about 17.5 million on hand, which, that's okay. This is a smaller, a little bit smaller of a company here, at least in, cash and short-term investments. So it would be nice to see them have a little bit more in case there was a good opportunity. But, just based on their profitability, it looks like they're really, they're making money on any of their assets. So their return on capital, so any money that they're deploying or capital that they do have, they're getting a 27.5% margin on that. So that looks good. And same thing with return on common equity, 53%. That's really good. I mean, that's great actually. Look at the sector median. They're doing a great job in that area. Net income per employee is over $2 million. That's nuts. Whew. That's somebody's getting rich off this company. So that's the second company. And again, with the stock price, I mean, it's under $7 at this point in time. They had a great return just on Friday. But the stock is under $7. So it's a less expensive stock to enter into, a position to get into. Again, their market cap is $4 billion. So they're a large company, large corporation, but still less expensive to move into a company like this. Now, again, just as a, to have some warnings, it's in a cyclical industry here. So there have been times within the past 5 years where their stock was, over $11. And now we're looking at it again, it's, $7. So if you invested in this stock 5 years ago, you'd be down nearly 40%. So it's something where you have to be in the stock at the right time in the market. And right now, energy seems to be a really good spot, especially this past year, a really good spot. And I think with all the complications with Russia, Ukraine, there's going to be a lot of opportunities happening out there. I think people are going to feel it at the pumps. Everybody's going to be feeling it, is what I'm assuming. But in a way to hedge against the cost of oil and gas at the pumps, well, hey, if you buy some of the stocks, you potentially could be making a return on it. So that's how I've been hedging against, raising the rise in gas prices lately, is buying different energy stocks. So that's number 2, guys. Moving on to the third value stock for today is going to be Star Bulk Carriers Corp, another fantastic company right here. Now, I've mentioned Star Bulk Carriers previously on the market interest because they are just really primed for taking off. They're doing a really good job this year. As you can see, they're up 121% in a 1-year period of time. 121%, really, really good. So far, year to date, their performance is up 40%. 40% year to date, guys. And now just take a peek at the S&P 500 and then take a look at this. Massive difference here. And this isn't typical. There aren't a lot of companies out there right now that are saying that they have a 40% return. The last time I mentioned Star Bulk, they're actually up about 13-14% since the last time I mentioned them, which was only a couple weeks ago. So their performance is really good. They just had their earnings report recently, and things are looking really good for the company. And so that's why I'm putting a little bit more into this company. Again, I bought them a few weeks back, have been holding on to them for a while, and we'll be buying a little bit more, especially after their most recent report. But let's dive into some of the details here again, guys. Stock price is only $32. Their earnings per share is $6. So that's solid compared to the stock price. Their forward multiple at 5. That's fair. That's a really low multiple, especially compared to what else is out there. The S&P 500, though the companies within the S&P 500, their forward multiples are usually within 16 to 17 on average. That's an average. Their dividend yield is 25%. That is insane. That's not something I would expect to continue moving forward or for a longer period of time. It might for a period of time, but I would not plan on that being a dividend yield for a long period of time. Just to refresh everybody's memory here, they are a shipping company, so they will move product from one country to another. We all need these types of companies where they're just loading up on a bunch of materials and shipping them from one place to another. They've got a lot of ships here. They've got a lot of ships. And goes over all the different kinds that they have, what they actually can move, how much product they can move. Pretty interesting if you want to dive into the details there. Get their profitability real quick. All right, so their gross margin, guys, 65, 66%. The sector median is only about 30. So they're solid there. Net income margin, they're at 47, 48. Sector median, 6.5. So these guys are really knocking it out of the park. Really, they're knocking it out of the park. Let's take a peek at them compared to their peers. Total return compared to their peers really looks like GOGL. This is another company that actually keeps popping up on my radar. This one I own over here, but this one here keeps popping up on my radar. This one, I'll have to check into this company too, because they seem to be doing well, seem to be overvalued. Year-to-date returns, again, they're beating their peers here. Their dividends are like through the roof. So yeah, and this other company, they really strong dividends. So yeah, I would not expect companies like that to have a dividend that strong. Again, not for a long period of time. It really just might be something temporary. Here we go. See, yeah, dividend safety here, guys. So looks like the safety of it, C a plus, dividend growth. They don't expect that to happen. The yield is fantastic. But the consistency, they have a D on it. So it might not be as consistent as one would like. So that's good. And growth, obviously, they've been knocking it out of the park. So their growth is fantastic. Their revenue growth, 105%, 106%. 3-year compounded annual growth rate, looking at nearly 30%. So really strong performance here, guys. So really strong performance, and this is why I think there should really be more of a focus on value-oriented stocks versus a lot of these growth companies right now. The multiples are on the multiples on the growth companies are just really, they're through the roof right now. We're seeing a recalibration in the market, and I think it is to reflect multiples that just make more sense, especially with interest rates rising or potentially rising in the near future. Inflation is here and needs to get under control. So you want to have a company that is producing cash, that's really cash heavy and generating a lot of cash. And this is where I feel like these three stocks are I perceive them to be undervalued. I really do, just based on their multiples, based on the cash that they are generating, their competitive advantages. And again, energy right now, it's a tricky area, but energy has been really, really strong. And I think the the tensions, the war that's happening right now with Russia, Ukraine, and the tensions with Russia and the rest of the world, a lot of other countries do not want to do business with Russia right now, and they're a major producer of energy. So if there are some ways where energy, other energy markets can kind of seep into Europe and start producing for them, there could be a really solid opportunity. So that's my thesis. That's where I'm landing. I plan on buying a little bit more of each of these companies within the next week. I want to just make sure all their earnings are in line and they're still producing the way that I'd like them to, and then moving forward from there. But if you guys have any questions, comments, or any suggestions, feel free to reach out to me. If you'd like a free consultation at all to see if these stocks are appropriate for your portfolio, feel free to click the link in the description below. That'll be a message directly to me, and we can schedule a time, do a phone consultation for free. If you want to join the conversation, unfortunately, we have the YouTube comments turned off due to compliance reasons, but you can join us on our Facebook page at The Market Interest, and we can have a conversation there, and feel free to recommend any other stocks that you'd like me to review in the near future. Don't forget to like, share, and subscribe, and I will see you guys next week.